Now, again, this is what government does and does so well, wink, wink. It reacts to domestic and global events. However, truth is, there's very little government can do about a spread of a virus. Lowering interest rates may help companies who have supply chains in China and or Asia, but domestic companies, pretty much fine. There are around 100 confirmed cases in the United States of coronavirus. So are these prudent governmental proactive decisions, or is it corona overreaction? Just like what had been happening, still is, in the stock market. Joining me now from Dallas, Texas, co-founder and chief strategist of GDP Advisors, Seth Denson. Seth, it scares the dickens out of me when I hear government officials say, we're going to come up with an emergency economic package. Because what flashes through my mind, I don't know about yours, but it's 2008, 2009 all over again. The so-called stimulus that you and I both know was a boondoggle, a taxpayer boondoggle to the tune of nearly $1 trillion that did absolutely nothing for the United States economy, like government could do anything for the economy.
Well, that's right. And I think there was a lot of us yesterday who rightfully predicted the market would bounce back and do what it did yesterday, that there's a lot of cash on the sidelines, and the economy, the U.S. economy is still in a very good position. This is just something that, quite frankly, freaked the markets out over the last week. And so I was somewhat shocked when the Fed came out this morning, not just that they did a rate cut. There was some part of me that thought that they might do it, but to do a whole half a point. And I think what we're seeing in the markets has been the adverse reaction to that, right? If the Fed had done a quarter of a point, then people say, okay, the Fed's engaged in the process, maybe they're paying attention. But to do a whole half a point makes the market go, what do they know that we not know? And now we've got that fear, uncertainty, and doubt kicking in.
Well, that's my question to you. I don't pay attention to numbers as closely as you do because it's your job. It's my job to know a little bit about them. But what exactly is the Fed looking at, other than if we exclude the stock market and the contagion of the panic that's gone on in the stock market the last couple of weeks or so? What exactly is the Fed seeing that I don't see that would precipitate a half a point cut?
Well, outside of the uncertainty that fear creates, right? I'm not sure either, and I think that's the volatility that they unintentionally maybe infused into the market today. I mean, if we think about since 1980, we've had roughly 12 big health scares throughout the United States. Of 11 of those health scares, within 6 months, the S&P was up over 8%. Within a year of those initial epidemic situations, the S&P was up over 13%. So fear is the mover of the market today. So I think what the Fed did this morning, unfortunately, was send it in a different direction. Listen, there's an old German proverb that says fear makes the great wolf bigger, and we need to be careful of that.
One last thing on this before I let you go. This is what concerns me. What if there is an actual economic downturn, and the Fed has now lowered a half a point? We're pretty near zero, getting darn close to zero. What happens then when the Fed needs to make an action?
Yeah, I mean, listen, I'm terrified of the idea of negative interest rates, right? I mean, I think that the market is just, as I've said a number of times throughout the day to our staff and some people that we work with, listen, the Fed kind of pulled the lever a little far this morning, and they don't have a lot of pulling left to do, and that's a terrifying place to be in if we have something else that kind of goes awry.
And again, I'd like to know what they're looking at because I don't quite see it. Seth, thank you.